Good morning and welcome back to the Opportunistic Trader. We were joined before by Greg Schwacke, and he gave us some interesting comments on EM currencies. It's September 21st, a Friday. Quadruple expiration, or I like to say still triple. I don't know the quad, but maybe they're putting in OEX or some other index. But anyway, it's a option expiration day. Should be a busy opening. We have talked all week about the trade setups, and the real trade was just to be long in general. We still like the long SEP, which worked really well, short DECE. You can actually unwind that by taking off. There may be a cash print up on the opening, but we're not 100% sure. So you really don't need the SEP futures. But I'd like to sell DECE off the opening. I would sell half a position on the opening at 9:30, and then if it trades higher, scale into the balance by 10 o'clock. And then I would use a next week 29.50 or 60 call, depending on how bearish you are. If you're more bearish, obviously go up to the cheaper strike. If not, just use the 50 call, and I would sit in that trade. These trades used to work pretty quickly within a day, but you may have to wait potentially a week for this trade to really work well. So that's what we're looking at off the opening. The bottom line is we should have been long some call spreads. We had a long bias in the market. We really didn't play it. We didn't think that we were going to have a 25 handle up move yesterday, which probably took a lot of the fire out of this index, for this opening print. So we'll be watching it. We'll give that print to you probably by about 9:40, where the cash cashes out. As far as trades, that's all we have on right now. We've been quiet over the last couple of days. We're going to become much more active. I was a little bit too focused on this expiration, which we were right about, but we didn't play in the most efficient way that we probably could have, because we did not expect a 25 handle up move yesterday. Looking at markets overseas, Asia rebounding very, very strongly. Shanghai up another 1.5%. Nikkei up about 1.5%, and Hang Seng up close to 2%. That FXI trade is working pretty well. The FXI is trading at 43.35, up from 40.75 earlier in the week. So it's been a nice 4 or 5% winner. Looking at Europe is up again. The DAX is up for the 5th straight day, 60 points. Every time I look at it, it's up 60. And then when I look at it when it's in down mode, it's down 60. So those indexes are
not managed. Those are totally free markets. They're not managed, Larry.
Yeah. So they're somehow now the DAX is only down 2% for the year after starting the week down about 6%. So it's had a 3% rally this week, along with our markets. They're still a big underperformance, obviously, that we've discussed for a long period of time between these indexes. Scouring the board, bonds are flattish. We expect yields to still go higher. They're trading around 308, 309 on the 10-year. We'll keep an eye on like 315 to a scoot up to maybe 3.25. And at some point, that's going to be market impactful. I don't know why it isn't right now, but I guess it's part of the expiration rig that we're looking at. So
when we circle back to bonds, I have some color that might be the trigger we're looking for, and it's related to real interest rates, and it's actually constructive and additional to what you're saying. So we're on the right track. But anyway, when you get back to it.
Okay. And overall, oil is back firmly above $70, traded almost 71. The October contract in futures went off the board yesterday, so you'll no longer see that. So this is all the focus as of right now, trading up about 55 cents. Gold is not moving as usual. And looking at the equity markets, interesting takeaway. Micron Technologies, which we thought was a long earlier in the week at the 41.42 handle, traded all the way up to 46.47. Felt you should get out because earnings were coming. The stock was trading a little bit higher, and then I think it was the CEO came on and said that they were going to be impacted by the tariffs in China, which was interesting because they really haven't even gone on yet. So he's expecting a market impact. The stock was actually down about 7%, has rallied back, is only down about 3.5%. So
can I add something on that? Because I know that's
Sure.
your baby, but I want to actually add and ask. Number one, to anyone who's listening, and you should be listening, buying or selling or putting a position on before earnings is a way to go. Taking it off as earnings come. This is a classic example of that. That's the emphasis or underlining on what you did yesterday. And I'm the first to criticize you, but as I was like, hey, we should be long into earnings, and you're like, no, I'm happy with $4. I'll get out before earnings. The question that begs commentary is, the CEO comes out after a good earnings and makes a comment that he's worried about tariffs affecting his company's exports or imports or whatever the hell they do. My question to you is, based on your experience, and nothing is written in stone here, it seems to me like he's just kind of getting his machine ready to ask for an exemption. I wear a tinfoil hat sometimes. Am I crazy?
I don't know if they're going to go that route. I think it's too early in the game to make that assessment. I think they're hedging. I do think that we're not, and we meaning the U.S. or Trump in this case, is not realizing the real impact. And I've been talking about this for a couple of days for sure. I mean, really, we're not hurting China per se. We're hurting our own companies and forcing companies and products to be potentially made here because it's going to be too expensive to make it there. But what's happened is in China, people want to work, they need work, and they'll work for a third or a tenth of what labor is in the United States. So
I'm moving my factory to China, Larry. I'm doing that.
Well, I'll tell you what, a lot of people have done that. I've manufactured goods in China, and it's we can't compete. So we're just hurting our own companies, I think, in the long run. And then in turn, there was a comment today by Walmart basically saying their prices are going to have to rise because obviously for them to bring product into the country is going to cost a ton more money. So in reality, you're creating an inflation scare, and you're creating a situation where our consumers are going to be hit in the wallet hard. And I don't think Trump realizes the effect of what this will be.
Or if he does, he doesn't care. Because let's face it, I mean, presidents, Trump or not otherwise, have built economies on the back of the patience and patriotism and tolerance of the tax-paying individual. This time, we're boiled frogs, I think.
Well, I don't know, about that, but I would say that it's just going to be a lot more impactful. I think, they're not going to sit back and take this. And I don't know by putting these tariffs on really what it's changing in China. The products here can't be competitive on a cost basis. So it doesn't even matter. They're going to still continue to make product in China, and they're still going to be able to bring it back here, even if it has a 10 to 25% tariff on it. Those
Right.
prices are just going to raise, you know. So
Right.
if a product sells for $50, they're going to make it 55. And if
Right.
it gets
And
a
domestic products, and this is where your inflation comes in. If a Chinese manufactured product is $50 with tariffs, and an American manufactured product that's a comp is $20, well, the American company can raise it up to $49 and sell. This sounds like opinion, but this is what happened in the 70s. Whether it be tariffs or a weakening dollar, eventually it incentivizes American companies to either leave and manufacture overseas, which is what you're saying, or those that stay get carve outs and raise prices just shy of the tariffs. Just my comments on what's coming.
Yeah, I mean it's early days, but Trump is an instant gratification kind of guy, and this is not a situation that's going to be instant in any way. And I actually think it's interesting. The Chinese responses are fairly light, and they're almost not caring very much. So it's going to be interesting to see how it plays out. It's early days. I think a lot of this reaction, especially on the equity front this week, is option expiration related. I've been saying it since Monday. I did not expect a 40 handle up week, and we got that. I wish that I was more aggressive yesterday in putting on the long, which I wasn't, the straight long, because I figured, Thursday afternoon, Thursday night on the close, we would have the ability to put on the long and get the cash print. But since they ran the market $25 yesterday, there probably won't be too big a print if there is any print at all. So the way to play this changes a little bit, and that's not to really be long the SEP. It's to just get out of the SEP, keep your D short, and then roll up with options up top to just hedge the risk. And I think, at some point, either later today, Monday, Tuesday, we could have a 30 to 50 handle sell off where you'll have the ability to make a ton of money, and you would be able to cash your cashed futures, which do that on the opening today, and just
I
be
want to
sure.
translate that for the audience and actually ask you a question in the process.
Sure.
Okay. I see two factors affecting our market right now that you're focused on. Maybe yesterday. One was the mechanical aspect that made you bullish. And the second is, and although you haven't really said it, but it's been something that's been a thread for the last week, is that if the EM markets turn around and go up, how can that be bullish for US stocks? Now, if I'm in your shoes, I'm not you, but if I'm in your place and I see a mechanical trade that says be long, and then I see the Shanghai Composite up 2.5%, I go, maybe I don't want to be so long. Maybe I want to wait. So it is a surprise. Again, putting myself in your shoes, it is a surprise for me to see the mechanical aspect of the move so overperform the last 2 days, given the fact that emerging markets have stabilized and attracted money from the US. That, it's coming out of bonds, not stocks. So maybe an opportunity to the upside was missed because you were cautious. I could have easily just dropped 50 handles. Now
I wasn't really cautious. I wasn't near as aggressive as I needed to be, because usually these moves happen later in the day on Thursday, and it just happened too quickly. We probably should have put on call spreads looking at it Tuesday. We could have put on a 15-point call spread for $2 to make 13, and we would have made the 13 pretty much. But we were
so
not
as a trader who wants to do this trade, I'm really asking you, as a trader who wants to do this trade, would it not be a bad idea for me the next time I see something like this, or we discuss this, for me to consider putting on a call spread for some of my position, and then putting on maybe a futures trade if nothing has happened by Wednesday or Thursday?
No,
You know
I
what I mean?
think
Like
you could
a
put the
partial
call.
entry.
I think you could always put the call spread on. What's great about options, as you know, is you could buy a $2 call spread and know your risk is only $2. So that really doesn't impact on the trade at all.
Right.
It's a good way to get leverage on, rather than do it equated to futures, which cost a lot of money. You could buy whatever your number is, 100, 500,
Right.
one
They
lot. It
depend
doesn't
on capital
matter,
you
and
overall.
you know
Right.
what your risk is. That was a little bit of the mistake we made early in the week. We should have at least had some on. We saw this. I was bullish basically from Monday on. I did not, in all in all honesty, I did not expect a move up to brand new highs and then to take out the highs. And we really should have spotted it, because the lagging index for the whole year was the Dow, and now the Dow made a new high, and the Dow, you look at it and it's like up 200. And I'm looking at my board yesterday, and I can't even find stocks that have it up 250. It's a weird market right now. FANG is certainly underperforming. They're
Right.
coming after the in big industrial stocks, the Caterpillars. I know Tommy Mac's been in Cat a bunch of times during the week. It's had an explosive week along with other industrial stocks.
Which is interesting considering that a lot of their businesses overseas and all this tariff talk is really contrary to their move. But what do I know?
No, but the reason why was the tariffs came on, and our world, it's instant impact. If nothing, happens instantly, they go and take the markets the other way. So they came in and
Right.
they bought these names. The banks have been strong, obviously, because rates are rising. I know you wanted to get to bonds. Bonds is the most interesting one on the board. I mean, it's a quiet debacle that nobody's really talking about. And the whole era of cheap money is gone. And I went actually last night to a hedge fund dinner that was in South Florida, and really people are talking about it, but it's like under wraps. And people are presenting ideas at these dinners, and they're like, oh, you can get 6%, 7%, 9%. And really the risk is high, and people were taking that risk when they couldn't get a return. But right now, you could get 3% all night long, totally
Right.
safe, or as safe as you could be. So
Right.
there are alternatives to the market. There are alternatives to alternative investments. So bonds are at an interesting level, and we'll see when and if that has an impact. And we've discussed this before. No one will talk about
Okay.
rates
Here's
until
here's when it'll have an impact. You have to take this with a grain of salt. As a person who looks at correlations, both real and perceived, uh, I've been following the bond market and since you've started describing it, and looking for U.S. bonds and U.S. stocks for correlations, and you'll see them intraday a little bit. The yield will go up on bonds, and some stocks will dip a little bit. But I haven't really seen a correlation I could really sink my teeth into until right now. Bear with me until the emerging market was deemed to be stable. Goldman Sachs bought, BlackRock bought. Copper rallied 2 days before. Surprise! How did that know? Dr. Copper is Dr. Copper, just not the U.S. doctor anymore. It's a doctor for emerging markets and Shanghai. But back to bonds. Bonds rallied. What I'm saying is, what is bullish for emerging market stocks and bonds is bearish for U.S. bonds. We're leaving U.S. stocks out of it for a second, but I'm coming right to that. So U.S. bond yields are up. We're focusing on the 10-year for this conversation, but that's what has suffered at the hands of the hot money flooding back into emerging market bonds and stocks. The question is, when does that correlation or possible correlation with U.S. stocks come in? And take it for what you will, because it comes from Goldman Sachs, but they use a phrase that I've used when I rant about hidden inflation. And the phrase they use is that it's actually in an article, says that Where is it? It's the boiled frog analogy that I mentioned earlier.
Yo,
Okay.
what's with this frog you keep talking about?
Okay. Well, the boiled frog concept is basically us. I've actually written for Zero Hedge using that concept. We're in the pot. We're being boiled. We'll be dead before we know it. But the reason Goldman Sachs is using it like this: Goldman Sachs is using, to your point, and something relevant. You're saying at some point bonds are going to have a negative effect on stocks. I agree. Where is that point? Is it at 3.25? Possibly. But I think worth looking at, in addition to the actual rate, is real interest rates. Real interest rates are still slightly negative. When those real interest rates go positive, I think you have your catalyst for a U.S. stock sell-off. Now, is that my opinion? Yes. It's my opinion because I look at real rates as comparison to gold. When real rates are negative, I'm bullish gold. That doesn't work out this year. When real rates are positive, I'm less bullish gold. I should be bearish. But Goldman Sachs has said that prolonged high bond yields, I'm quoting now, and the potential for real interest rates going positive is, you can ask them what boiling frog means, Larry,
Please
is
tell
the
me.
boiling frog of U.S. stocks. It will have a deleterious effect on stocks if real yields go positive as interest rates go higher. And we're not far off from that.
Well,
So,
what is? I mean, you're saying real rates and those levels. I mean,
well,
I don't know what a real rate
okay,
level
well,
would be.
it's kind of like,
I mean, we're at
I know you know this.
Well, no, but we're at 3.5, and for 10 years we were at 0. So I think because of what happened in the shock of 2008-9, real rates are, out the window, and it's actually, to be honest with you, shocking to me that rates are above 3%, given how fragile the world
That's
really
a valid
is.
counterpoint to what Goldman is saying. Who gives a shit about real rates given how they have been so non-relevant to the market in general? And I agree with you. Real rates don't have to go, just to agree with you before I, elaborate on what Goldman is saying. Real rates don't have to go positive for stocks to go down. Real rates can just be less negative. Like there's no trend. There's just like this digital aspect. But to the audience, and I know obviously you get this, is that when you take an interest rate, let's say we're running 3.08%, and depending on whose statistics you're using, you factor out the inflation rate, you will get a negative real interest rate, which means, speaking as a gold guy, if negative real rates are 0, or if real rates are 0, that means interest rates factoring out the inflation rate, then what you're looking at is no opportunity cost in owning an asset that doesn't earn interest. So gold is a yellow brick. It's a doorstop. It does nothing. And let's say you're not storing it. If real interest rates are 0 or negative, then it's okay to own gold, although that hasn't worked because you're not giving opportunity cost of money. But if real rates go positive, let's say the Fed raises rates to 5%, but inflation is only 2%. That's a real return of 3%. And you cannot tell me that's not going to affect stocks in the extreme, especially stocks that are going to have their profit margins compressed because of foreign tariffs. Now, I'm getting into fundamentals here, and we're short-term traders genetically. So I'm just saying that's my macro trigger. When I see interest rates go to a point that stocks start acting negatively, to your point, Larry, then I will just look at real interest rates for confirmation, and then I will just short the crap out of stocks one way or another. How's that? That's how I'm looking at it.
It sounds like a plan. It sounds
complicated.
Like a plan, it sounds like a complicated plan, but it sounds like a plan. I don't need all that plan to,
No, but that's the macro. That goes out the window as soon as the day starts. Come on, I'm a guy who used to work at a company that, and you'll laugh at this, that, we would sit in our meetings and one of the kids would say, we're long gold vol and short oil vol. And our boss would say, so an alien lands and he buys gold and craps oil. How are you hedged? I mean, these are ridiculous things to think about, but the point is, it makes you think of what you don't know, black swans and what have you. Which actually brings me to oil. I wanted to ask you about
You're
oil
talking
today.
about a lot of animals today.
All right, listen, lobsters don't make a sound when they're boiled either. I have an oil question, a specific oil question. Okay, the system that I have when I'm not, flipping coins and trading on my own tuition, said to buy oil. Said to buy natural gas and sell oil. Now my stops are too tight. That's a function of me fine tuning my own risk. But what I'm looking at today now in oil is, as well as stocks, which is kind of interesting. Starting with stocks, I see stocks as a short. And believe me, I've no interest in just agreeing with you. I also see oil as a short, and it's not an intuitive thing. The system that I have is momentum based, and I think the way you trade, a lot of it coincides, not necessarily with when I have a system that has Bollinger Bands or momentum as overbought. You frequently, and I saw it as coincidentally, see a regression to the mean possibly coming and sell. So here I am looking at my vol system saying vol is overbought on the daily in crude. You should sell it and look for a regression to the mean, risking new highs. And mind you, I'm not doing that yet because I'm not that confident in using the system as a regression to the mean system. And stocks are even more of a sale as long as we're not above new highs. But that's only on a 4-hourly setup.
Yeah,
I just wanted your opinion
on equities. We're at all-time highs on all indexes. It's a tough short. It goes against the grain.
It is, and that's actually my phrase. It's the hardest short to do for me.
Yeah, so then you don't, you wait it out. You see, listen, you don't have to do this trade. If you don't like it, you just wait on it. Anyone that's listening, I mean, for me, I would do this trade. I don't know when it's coming, whether it's today, tomorrow, Monday, or midweek. I want to give myself a little bit of time using options to stop me out and have the opportunity to capitalize on the downside.
But I'm asking you a question as a student, as a momentum trader who will get stopped out 2 out of 3 times and on the third time make money, depending where my stops are. I'm looking at my system in an inverted way now, which is a regression to the mean system. And it's tough for me to sell strength. I'm the guy who will sell weakness coming off of strength, buy strength coming off of weakness. And I need my hand held. I need my hand.
It's a different way to trade. I'm not looking for the home run move. It's interesting. We've discussed this many, many times. For me, my hit ratio is pretty good, but a lot of people that are long vol or trend followers, and Mike, who sits with me, would tell you in the CTA land, these guys are looking for one particular trade to make their year. So they get on it.
That's crazy.
Listen, in the past, it hasn't worked well for CTA land over the last bunch of years. And a lot of that reason is because a lot of these markets have become a lot more liquid and a lot more efficient. Back in the day, you could, position and have markets move 20% on air, especially the smaller, less liquid markets. But now all these markets have become efficient. It's very difficult to get that career up and out move. You'll see it more in where Greg trades in the emerging market currencies or trading the Turkish lira, which is moving 17% or 25% a day. Now it's not, but it was.
A lot of macro funds have shut down for that reason that you're talking about, looking for big moves in Japan versus China and betting 90% of their fund against it, and they're gone. Eclectica is an example of that.
Yeah. Well, it's interesting. If you did that trade this year and you were long Japan and short China, you killed it. That's a 24% winner.
You Henry unwound. So obviously it has to be a trade to do now after someone gets out. On your comment on the CTAs, I would imagine, and based on what you just said, that CTAs or fund people allocating the CTAs are no longer looking for anything but 1% per month profits in a specific asset that has 90% of their money in cash overnight and takes no risk at all, because let's face it, fun people are just looking to trade CTAs like we trade stocks. It's considering there's a lack of home runs. It's just a comment I'm just making there for what it's worth.
Yeah, I don't. Yeah, again.
Well, I mean, the CTA money is, if the home runs aren't there, what are they doing? They must be looking for signals now. I mean, short-term trades. I mean, singles, not signals.
Oh, I don't. I still think they're looking for home runs, but maybe they're hitting singles. I just wanted to point out, it's funny. We talk about the British pound and the Brexit, and Greg talks about it a lot. It's interesting to me, and again, I'm not really a currency guru, like Greg is, but every time I look at this British pound, it's at 131. It's like it's been here for years, and it keeps going up. People get crazy at 133, and then it comes back to 130. Then it goes to 128. Everyone thinks it's breaking down. It goes back to 131. I think, the Brit exit, everyone's like, oh, if it goes smoothly, the British pound is going to rally against the dollar. But I don't even know if that's the case. I mean,
right.
There'll be a single currency on an island alone, and there's, a lot of things out there that could, impact them. So it's something, something to watch on the currency front. I've been focused on the Canadian dollar. It's at 128 and some change, 128.86. It started the week in the 131 handle. It's funny. Greg had come on earlier and said that the Canadian contingent left and there's not going to be a NAFTA deal. And again, it's one of those things like now nobody cares. So, it's interesting in general to watch everything that's going on around these currencies. And Greg really has a good handle on it. But I just wanted to point out, I look at the British pound every day and it's 131. And, again, I don't really.
But it's a very tense 131, Larry.
Yeah, well, I don't know every headline.
No, Larry, I'm joking. We can't see each other. I'm smiling.
I understand, but I'm saying I think it moves like a full figure on each headline, but it doesn't go anywhere. So.
No, they'll have a Brexit. It will rally, and then all of the UK will split up. Wales will secede. Ireland will secede and go back to the EU. And then Britain will become a colony of the U.S. But that's just me being sarcastic. But short-term versus long-term, I think, is what you're getting at.
Yeah, I wanted to point out on the S&P for the expiration today, the futures and the cash trade at the same price because there's no time anymore, and it's trading at 29.35. And looking at the 29.35 straddle, it's trading at $2.65, which is shockingly low. And there's an hour to go, and it looks very, very cheap. So,
what's your last print on the on the SPY? I mean, not the SPY, the ES.
Oh, on the futures?
Yeah.
Which future?
Let's just go prompt, the one closest to cash.
It's 29.34 and a quarter last.
Okay.
Up,
all right.
Actually, a half, up 50 cents. These futures are above 29.40.
Right.
I'd like to sell those after the opening and buy a call. That's a trade.
So it's close to fair value with the SPY so far right now, right? The SPY was 29.35 or 36. So it's not that far off from fair value at the moment, or am I using that phrase incorrectly?
Yeah, I don't know what you're I don't know what you're looking at.
Looking at futures versus cash, the SPY or the SPX.
Well, the SPY is a different index. That's an ETF on the SPX, and the S&P cash is going to trade at the same price as the September futures.
Right.
It's not trading right now. It's gonna open at 9:30 with an opening print. And
these are questions I'm asking because I do have a system trade coming on. I'm looking at a 4-hour that says overbought, and I'm scared to sell strength. I'm more likely to sell weakness. But on the 1 hour, below 29.43, I get a possible signal to sell for a couple hours. So uh, maybe there's a rationalization for me getting short after all. You know,
Maybe. Again, we're gonna assess this after the opening print. It's not a rush trade. We'd like to have it on by 10 o'clock, as long as it sets up, and we'll look at that. We're gonna probably trade some equities today as well. Look at some of the FANG names. Look at Apple. Apple, I think, is releasing the phone today. I don't think that it had, it didn't sell out or anything like that, which is
so you
shocking.
didn't buy enough of them?
Yeah, you know what? I actually bought a two lot. I bought my phone. I'm running two phones right now, unfortunately, because I'm having
your
phone
hedges
issues.
long puts. You know, on the stock market itself. Actually, this is more of a macro comment. A lot of times you hear me say off screen "Fu Friday," but I think the more politically correct phrase would be "Friday follies." Oil tends to rally on Fridays, or that's what Tracy would say. I tend to say that whatever the week has happened, whatever the trend of the week is, Friday tends to be a reversal of that trend. So I'm applying that to the S&P, and I'm going to rationalize being short if it has to kill me today.
Well, don't do that. Always be flexible, and
Oh no, I'm flexible. I mean, I fit into any
let
size
it
cash if I lose.
let it play. Oil is interesting. There's a OPEC meeting over the weekend in Algiers, and I guess Trump's tweet yesterday that oil prices were too high coincided with the potential meeting, and the bottom line is we'll see if they give him what he wants out of that meeting. I don't think the market's expecting much on
I
that
don't think he'll
front.
do anything until he says oil prices are very high. Too high won't do it, but very high will make them listen to him. I think that's the way to go there. Look for the word very or huge.
Well, that's
But Novi Crude doesn't look so uh, good short term, but I have nothing to show for that.
really, I think we're up through the channel in here. I think the high on this contract might be 72 and some change on the whole move. So, I mean, we're within striking
No,
distance of
when
that.
that's the thing. When I say I show nothing, that means from a volatility perspective, I've got no good risk reward. Doesn't mean we can't rally to heaven. I have no technical basis for my comments. They're just comments based on that. We are in a 4 or 5 hour trend higher now on this system, and I have nothing to add to it except that looking technically, I look at we have some wicks to get through on the hourly between 71 and 71.30, but above that we could run. But I'm not a technician.
Yeah, I don't really have that much of opinion. I think I would take it in short into the weekend and then use some upside calls again, almost the same type of strategy as you have in S&P to be able to hold your short a little bit longer. But again, we're open-minded. I expected a little of yesterday today. It all came yesterday. A little disheartening. But what's nice about this is every quarter we go through this, year after year after year. So it's always there. It's something to point out to everyone. Hopefully, people looked at it, learned a little bit. I tried to be granular on it, and I hope people, took advantage of being long and made a bit of money on that side at the very minimum. I do think, I see it, we're approaching 9 o'clock, everything opens on a cash print at 9:30. But I see futures ticking up into this. So it'll be interesting to see where the roll goes off. It's trading at $5.40 under SEP under DEES.
Anything catch your eye on the individual stock side other than the fact that the Tilray hourly chart is just something fun to look at?
Where is that thing? Oh, it's down a
It
smooth
closed at
20.
177 after filling a gap on the hourly, but just looking obliterated within the chart itself. I don't know. It's just something to look at.
Yeah, I don't.
It's something to trade. Let's put it that way. I'm waiting for the Tillery or the Tilray crypto coin to come out before I short it. Other than that, I'll just talk to my cousin who is a cancer survivor and told me to buy pot stocks, and I laughed at her. So how stupid am I?
Well, it's interesting. It's actually a sector that we'll look at in a year or two, and it'll be minor. It's giving. It's in total blow up land, and
Yeah.
to me, anyone that wants to smoke or eat or whatever cannabis can do it right now.
Right.
It's not really hard to get. I go out to dinner and people are pulling out CBD oil like gummy bears, like it's water. So I'm not understanding the whole mantra that everybody's going to be smoking that can't smoke now, or eating it or whatever,
Well,
and
I
that
think
women
once it
aren't
gets
going
you
to drink
government-
alcohol.
Of course, you're right, but it's a fragmented industry, like any other industry that's mom and pop. And I think once big pharma gets a hold of it on how to promote it as come on, Lexapro, whatever these names they come up with, Viagra, it's going to be Potapro or
look, time out. I turned to my CNBC and they're in Canada in a cannabis plant factory.
All right. So I'm going to go with a derivative play. I'm going to get long hemp because that's going to be a rope that I think is going to be used. Let's go with that because I'm too late on the pot. So I'm going to buy hemp. Hemp futures, if there is one. Anyway,
it's interesting. As we were speaking, the S&P just popped $4.
Yeah, and gold dropped 4. So I guess the dollar is weaker.
Gold
stocks like
a
that.
lot more than 4. Gold's down 9 right now.
Yeah, I look at a different. Oh, there you go.
What are you looking
Cash is down. Yeah, no, it's down 9. It wasn't down 9 3 minutes ago. Yeah. Look at your minute chart, and you'll see that.
So it popped down. It's down 850. Obviously breaking down.
Danger zone if you're playing it. You might want to buy a dip here, but be careful in the 93 area.
Yeah.
If we get there.
Yeah.
Yeah.
So that's that's it from here. I don't know if you have any other thoughts on any other markets that might be meaningful.
Well, you want to well, nothing. I mean, that's so backhanded. Most of the stuff I say is not meaningful. It's there for you.
Well, you already said a lot of meaningful things, so I want to make sure that before we leave the air and go to the chat room that you give everybody everything.
well played, Larry. Okay, I have a question for you. VIX. Considering you're looking at stocks, what's the VIX telling you, if anything, as an indicator, as something to trade? Not just your short-term straddle, which is key to your strategy.
The VIX looked elevated about a week and a half to 2 weeks ago. It's done nothing but come in. It's trading at the $12 level, probably a little bit lower than that implied, and that leads me to think that there's a complacency in the market. So maybe that'll lead to a little bit of volatility. But listen, the truth is, it's the end of September. We're coming into October. Before you know it, it'll be the election. The election could throw a major wrinkle into the market, I do think, and it actually could send us from whatever level we're at to majorly negative on the year if he loses big. The Republicans.
And if he wins, it could go negative too.
Yeah, but I don't think it'll have as much a chance to do that if that's the case. And it's interesting. You can see, the futures are just bid to the moon. It's amazing. I mean, I was looking at stocks before, and my board was utterly mixed. And now every stock just like ticked up. So I guess they're going to print this thing, which is going to be good for us. And we'll be short the D's after the cash print, and we'll give you the cash print probably at about 9:45. It comes out, so you'll know where the September went off the board, and you'll be able to trade D's outright. And that's that's it from here. Again, the stocks firmed up a bit. Futures, when we got on the air, were down about $1. They're up about 375. The futures roll is trading at the 515 level. It's come in a bit, negative 515. We like that trade a lot. You know, cash out and then stay short these. And today, since there's really no option to trade, we're going to probably look to put some positions on SPY, which is the equity derivative of the S&P futures. But we'll be active in SPY today and some individual equities. I want to go over the schedule today. We have Joe Vaclavic at 9 o'clock from Standard Grain discussing the ag markets. He comes on every day with us. Then at 9:30, I will come back on, probably about 9:35, look to see where the cash went out, look to see how to structure the hedge against the short D's position in the S&P futures. Then at 10 o'clock, we have Tony Greer from TG Macro discussing equity markets. I want to hear his thoughts on the cannabis space, as well as other ideas he's looking at. Then at 11 o'clock from London, we have Alan Hill discussing the macro markets and giving us a on-the-ground look at the thoughts on Brit exit. And
that's fortuitous timing, considering May is speaking now, if not soon. That's actually pretty cool.
Yeah, so he'll be on, and he'll be giving his view on the his home currency, the British pound versus the US dollar. Then, as always, on Friday, Mark Fisher will be joining us at about noon to discuss any trading opportunities that he sees in the market and what his trading community is focused on at this moment. And then at 1 o'clock, Brad Feinberg will be joining us talking about fantasy football, and he won $1 million weekly prize in DraftKings in their fantasy pool. I'm actually envious. I wish I was good at that stuff. My kids are. I can't figure it out. So,
next generation of trading, Lar. I mean, your kids have the genes. Now they just have the product to trade.
Oh, exactly. So they like the sports angle. So I'll keep them there. And
Dad, you're so old. Nobody trades WTI. Everybody trades, the Browns versus the Eagles.
Exactly.
Like whatever.
So we have him coming on at 1, and I'll be on audio through the day going over some stuff. Hopefully we get some big moves. I think we're going to get the cash print that I was thinking that we were going to get. I wasn't so confident about 20 minutes ago, but markets have firmed, and they're coming in to buy the opening. So I don't know if we'll get $3 on this thing on the cash print or whatever, but we'll be back to you after the opening to discuss it and go over everything. And I wish everybody luck. And Vince, thanks for joining me all week. I really appreciate it. It's a lot of fun, and I will see you in the chat room. And
thank you.
And
shameless self promotion, Lar. Something you said to me off the air. Did we have like 27 or 30,000 viewers of this program a day or two ago off of Facebook?
I think
maybe
so.
Maybe Mike can chime in on that. I'm not sure where that number came from.
I wish that number was correct, but no, you're talking about a video that we've had about 30,000 views of one of our videos, but not of the actual.
Which video?
The video of me, Vince. You didn't make the cut. It's me alone.
A video of you alone?
No, one of the intro videos of the business has hit 30,000 views.
That's awesome.
Yeah,
so we can ask questions in Q&A this morning.
AM report will hopefully in a few months we'll be getting 30,000 views a day.
Yeah. Look, I don't have that many cousins. Okay, so this is better. This has got to work organically.
Relatives don't count. No, I'm kidding.
Exactly. What? Dude, I converted to Judaism, but I still get Christmas gifts. Relatives count. I'm sorry, it's just the way it works. Q&A for the questions today, Mike, when Fisher's on, because I'm going to have a couple things to ask.
That's great. Please, everybody, write questions for, whether it be Tony Greer or Alan Hill, Mark Fisher, or even the fantasy football coming up. The more participation, the better. We're counting on it. That's what really makes the community a community is, any question you have, just ask it in the chat and we'll try to get to it.
I look forward to it. I'm around today, Larry, if you need someone to hold your coffee cup, for crying out loud.
All right, Vince. Listen, have a good day. Good luck, everyone, and let's make some money.
All right.